Here's the 0% tax strategy that the billionaires play, and this is what Elon Musk does. And under Trump, this tax strategy actually became a little bit more favorable. So you've heard about investing in businesses. When you invest in a qualified business and you are part owner, let's just say that you invest $1 million into a business, and I'm going to get into a lower level strategy in a second here. You invest into a business $1 million, and you're one of 5 owners, and you invest $1 million, okay, it's $5 million. It exits a few years later for $20 million. So there's a $15 million gain, which you're getting 20% of because you're 20% owner. So you end up with $3 million. Do you pay tax on that? No, you don't. You don't pay any taxes on that. There's literally a tax law for this. Secondly, if the exit is stacking up to happen and there's an evaluation done and you're in that process, there are actually strategies where you can go to a bank and you can say, hey, here's this business that's building up for an exit. Here's the valuation, it's $15 million. $3 million of that will be mine. I would like $1 million line of credit, please, against that. There's no risk to the bank because if all the I's are dotted and the T's are crossed, they see that the exit's gonna happen. They see that your collateral is a $3 million payday. There's a tax law that allows you to not actually have any taxes when you realize this profit, and you can take out a line of credit, pay yourself that as a salary. It's debt, so it's not taxed. And then when the business exits, you pay that line of credit back, you walk with your net of $2 million, and you go repeat it again, paying no taxes. Now the other strategy where you pay little to no taxes is investing in oil. There's 506c funds, which means you have to be accredited. If you're not accredited, you find what's called a Reg A fund. A Reg A fund allows you to go into an oil deal, and you can write off 80 to 100% of the capital you invest in the year you invest against your earned income. So if you're making $100,000 in a year and you have stacked and you've saved up, let's say $60,000, you can get as high as a $60,000 write-off in the year you invest. What does that mean? Your tax basis went from $100,000 down to 40. If you want to have 0% on your taxes that year, maybe you stack a little bit more and you invest a little bit more, so you pay 0. Then that investment earns cash flow and you're set up for a nice exit a few years later. That's how the wealthy avoid or pay little to no taxes.